Students, now we have to start module 3rd of accounting and finance, that is financial statement. The most important aspect of every accounting work and accounting knowledge or accounting profession is the preparation of financial statements. ആ തെറ്റ് പറ്റാതിരിക്കണമെങ്കിൽ പണ്ട് നമ്മുടെ പെരുന്തച്ഛന് പറ്റിയ തെറ്റ് ജേണലും ലെഡ്ജറും ട്രയൽ ബാലൻസ് എല്ലാം ശരിയായിരുന്നു. പിന്നെ പെരുന്തച്ഛന് പറ്റിയ തെറ്റ് എവിടെ? ഫിനാൻഷ്യൽ സ്റ്റേറ്റ്മെന്റ്സ്, ഫൈനൽ അക്കൗണ്ട്സ്, ബാലൻസ് ഷീറ്റ് അതിൻ്റെ പ്രിപ്പറേഷൻ. നമ്മുടെ മുയൽ, കഥകളിലെ മുയലിന് പറ്റിയ തെറ്റും അന്തിമ നിമിഷത്തിൽ പറ്റിയ തെറ്റ്, ജേണലും ലെഡ്ജറും ട്രയൽ ബാലൻസും ശരിയാക്കി മുയലിന് പറ്റിയ തെറ്റ്, അത് ഫിനാൻഷ്യൽ സ്റ്റേറ്റ്മെന്റ്സിന്റെ പ്രിപ്പറേഷന് പറ്റിയ തെറ്റാണ്. നമ്മുടെ കഥകളിലെ ഭൂതം കാത്തുകൊണ്ടിരുന്ന് രാജകുമാരിയല്ല, നിധിയല്ല, രാജകൊട്ടാരങ്ങളെ കോട്ടകളെയല്ല, ഫിനാൻഷ്യൽ സ്റ്റേറ്റ്മെന്റ്സ് ആയിരുന്നു. സോ സ്റ്റുഡൻസ്, you have to learn and study financial statement with utmost care, unless you have no chance in NET 2018 December examination. So we have to start the financial statements of accountancy. Before starting the preparation of financial statements, you have to learn the basic objectives behind the preparation of financial statements. What are the basic objectives behind the preparation of financial statements? Following are the basic objectives for the preparation of financial statements. First one is to provide reliable financial information about economic resources and obligations of business firm. The second one is to provide other needed information about changes in such economic resources and economic scenario. And third one is to provide reliable information about changes in net resources arising out of business activity. And the last and not the least, to disclose to the extent possible other information related to the financial statements that is relevant to the needs of the users of these statements. Those are the basic objectives for the preparation of financial statements in every accounting knowledge. There are 5 different types of business owners. What are the 5 different types of business owners? One is sole trading concern, and second one is partnership firm. Third one is joint stock company. We may classify a joint stock company into 2. One is public limited company and other is private limited company. And the fourth one is cooperative type of organization. And the last and the not least, government departments or government companies. As far as government departments is concerned, single entry system of accounting is followed in all government departments in Kerala. As far as government companies board are concerned, there is a statute which is so relevant to every and each government board and government undertaking in Kerala. So there is a system of accounting which is to be followed, is mentioned in relevant statute or act of each and every government board and government undertaking. So each and every government board or government undertaking or government company is to prepare their set of accounts including financial statements on the basis of their relevant statute and act. As far as cooperative societies of our state is concerned, there is Kerala Cooperative Societies Act of 1969 is relevant in Kerala state. So every cooperative society in Kerala is to prepare their financial statements on the basis of Kerala Cooperative Societies Act of 1969. As far as other cooperative societies of India concerned, there is 3 basic acts which is so relevant to the cooperative societies except the cooperative societies in Kerala. What are the 3 relevant acts which are so relevant to the cooperative societies of other states? First one is Cooperative Act of 1904, second one is Cooperative Act of 1912, and third one is a multi-state cooperative act. So every and each cooperative society has to prepare their financial statements on the basis of cooperative act, relevant cooperative act. If it is a cooperative society in Kerala, they have to follow Kerala Cooperative Society Act. If it is a cooperative society of other state, they have to follow the relevant act which I have mentioned earlier in this module. As far as a public limited company and a private limited company are concerned, they have to follow the Ind AS prepared and published and prescribed by the Ministry of Corporate Affairs. So we have to limit our study of financial statement in this module for the preparation of the financial statements of sole trading concern. As far as sole trading concerned, they have no compulsion to follow Ind AS RIS. So they have to follow and prepare financial statements on the basis of traditional accounting knowledge. As far as traditional accounting knowledge is concerned, the two different type of financial statement. One is profit and loss account and other one is balance sheet. First one is profit and loss account. Each and every profit and loss account has two aspects or two elements or two parts. One is trading account and other is profit and loss account. What is the objective for the preparation trading account? Trading account is prepared to ascertain the trading result of business, whereas profit and loss account is prepared to ascertain the profit and loss of the business firm. There is a format or basic structure for the preparation trade account as far as traditional account terminology is concerned. Every trading account has two aspects. One is debit and other is credit. You have to debit all direct expenditure relating to your business and you have to credit all direct income of your business. After entering debit items and credit items, you have to balance your trade account. Then you have to get, if it is a debit balance, it is known as loss. If it is a credit balance, it is known as gross profit. If it is a debit balance, it is known as gross loss. If it is a credit balance, it is known as gross profit. Then you have to consider what are the items which are to be debited in trade account. Trade account debit side direct business side direct expenditure debit items. First one is opening stock, second one is purchases, then you have to less purchase returns from purchase, and third one is other direct expenditure. What are the other direct expenditure which are relating to trading concern? Carriage, inwards, wages, import duty, octroi charged by municipality or corporation, freight, clearing charges, fuel, royalty based on production, consumer stores, power, gas, water, excise duty, dock dues, customs duty, primary packing material, cartage. Then, which are the items that are to be credited? First one is by sales, then you have to less or deduct sales returns from sale. Second one is closing stock. After the preparation trade account, you have to draw or prepare profit and loss account as part of the trade account, not a separate account, only as a part of the trade account. Both trading and profit and loss account are known as profit and loss account. Single name, only one name, profit and loss account, but it has two elements. First part is trade account and second part is profit and loss account. Then, what are the items which are to be debited in profit and loss account? What are the items which are to be credited in profit and loss account? First of all, we have to look what are the items which are to be debited in profit and loss account. All indirect expenditure which are related to your trading concern are to be debited, and all indirect income which are related with your trading concern are to be credited. So please look what are the indirect expenditure which are to be debited in the debit side of your profit and loss account. Salaries, rent, right, taxes, postage, telegram, audit fees, stationery, printing, telephone charges, legal charges, insurance, entertainment expenditure, repairs, renewals. Whereas some items are to be credited: rent received, discount received, commission received, bad debt recovered, profit on sale of fixed asset, apprenticeship premium, income from investment, dividend on shares. Also, depreciation on asset, interest, sundry trade expenditure, conveyance, charity, bank charges, office expenditure, establishment charges, general charges, stable charges, loss on exchange, license fee, brokerage, upkeep of cars, office lighting, loss by fire, loss by theft, commission paid are to be debited, whereas indirect incomes such as dividend on shares, difference in exchange, miscellaneous expenditure, income from source are to be credited. After entering all debit items and all credit items in profit and loss account, element of your profit and loss account, you have to balance your profit and loss account. If the balance has happened in debit side, it is known as net profit. If a balance is happened in credit side, which is known as net loss. The two important type of financial statements as far as traditional account terminology is concerned, first one is profit and loss account and second one is balance sheet. What is balance sheet? Balance sheet is prepared to know the financial position of your business ആ പെരുന്തച്ഛന് പറ്റിയ തെറ്റ് പറ്റാതിരിക്കുക, മുയലിന് പറ്റിയ തെറ്റ് പറ്റാതിരിക്കുക, നിങ്ങൾ ജീവിതത്തിൻ്റെ ബാലൻസ് ഷീറ്റ് വരയ്ക്കുന്നതിൻ്റെ കൂടെ അക്കൗണ്ടൻസി ബാലൻസ് ഷീറ്റും കറക്റ്റായി വരയ്ക്കണം. സോ what are the important elements of balance sheet? There are two different aspects of balance sheet. There are two different sides of balance sheet. First one is liability side and second one is asset side. Liability means current liabilities and long-term liability. You have to show all current liabilities and long-term liabilities and capital in the liability side of balance sheet, and you have to show current asset, fixed asset, and goodwill in the asset side of balance sheet. So please look, what are the liabilities which are to be shown as liabilities side of the balance sheet? Current liabilities such as bank overdraft, bills payable, outstanding expenditures, sundry creditors, income received in advance, and long-term loans such as loans and capital element are to be shown as liabilities on the liability side of the balance sheet. Capital is to be shown as capital, opening capital, add addition capital, add interest on capital, add net profit, less drawings, less interest on drawings, which is the position of the capital in your balance sheet. So please look, what are the items which are to be shown as asset on the asset of the balance sheet? Current assets such as cash in hand, cash at bank, bills receivable, sundry debtors, prepaid expenditure, outstanding income, closing stock, and fixed assets such as land and building, plant, furniture, and goodwill are to be shown as asset on the asset side of the balance sheet. So then there is a problem of adjustment. What is adjustments? Adjustment means the transaction which are to be occurred after the last date of the accounting year but before the preparation of the your final accounts. അക്കൗണ്ടിങ് ഇയറിൻ്റെ അവസാനത്തെ ഡേറ്റ് മാർച്ച് 31 അവസാനിക്കേണ്ടത് നിങ്ങൾ അക്കൗണ്ട്സ് ഉണ്ടാക്കുന്നത് മെയ് 15 മെയ് 14 മെയ് 18 ആയിക്കോട്ടെ. മാർച്ച് 31 മുതൽക്ക് ആ മെയിലെ പർട്ടിക്കുലർ ഡേറ്റ് വരെ ഉണ്ടാവുന്ന ട്രാൻസാക്ഷൻസ് നിങ്ങൾ ഇതുവരെ അഡ്ജസ്റ്റ് ചെയ്തിട്ടുണ്ടാവില്ല. അത് അഡ്ജസ്റ്റ് ചെയ്യണം. അത് അഡ്ജസ്റ്റ് ചെയ്യാൻ വേണ്ടിയിട്ട് നിങ്ങൾ എഴുതുന്ന ജേണലിനെ വിളിക്കുന്ന പേരാണ് അഡ്ജസ്റ്റ്മെൻറ്റ് എൻട്രീസ്. ആ ട്രാൻസാക്ഷൻ വിളിക്കുന്ന പേരാണ് അഡ്ജസ്റ്റ്മെൻറ്റ്സ്. സോ as far as traditional accounting terminology or knowledge is concerned, first of all you have to keep your source document. Second is the preparation of journal, and third is the preparation of ledger. Then next is the trial balance. Next is the closing and adjustment entries. Then after the adjustment and closing entries, there is a question of preparation of final accounts. After closing and adjustment entries, you have to prepare trade account, profit and loss account, and balance sheet respectively. So there is an important position of adjustments in each and every final account. So please consider you have to adjust all adjustment entries in journal, ledger, trial balance, and your financial statements before the preparation of your financial statements. So please look, what are the important adjustments which are to be entered or incorporated in your financial statements. First one is closed stock. Closed stock has two adjustments. First one is you have to show closed stock as a credit item in your trade account. Second one is you have to show closed stock as a current asset in your balance sheet. Then second one is outstanding expenditure. What is the accounting treatment of outstanding expenditure? First one, you have to add outstanding expenditure with the expenditure in trade account or in profit and loss account. Besides, you have to show outstanding expenditure as a current liability in your balance sheet. Third one is prepaid expenditure. Prepaid expenditure trade account, profit and loss account, ബന്ധപ്പെട്ട ആ expenditure മൈനസ് ചെയ്യും വേണം, ബാലൻസ് ഷീറ്റ് ലാസ്റ്റ് കാണിക്കും വേണം. And the fourth one is income earned but not received. Income earned but not received. You have to add income earned but not received with the income aspect in trade account or profit and loss account. Then another adjustment is you have to show income earned but not received as a current asset in your balance sheet. Then next one is income received in advance. You have to deduct income received in advance from the respective income from your profit and loss account. First adjustment is that. Then the second adjustment is you have to show income received advance as a current liability item in your balance sheet. Then next one is depreciation. What is adjustment depreciation? You have to first show depreciation as a expenditure in your profit and loss account. Second adjustment is you have to deduct depreciation from the relevant fixed asset in your balance sheet. Then bad debt. ബാഡറ്റിന് അഡ്ജസ്റ്റ്മെൻറ്റ് ആദ്യം പ്രോഫിറ്റ് ആൻഡ് ലോസ് അക്കൗണ്ട് ഡെബിറ്റ് സൈഡിൽ ബാഡറ്റ് കാണിക്കുക, ബാഡറ്റിന് കാണിച്ചു കഴിഞ്ഞിട്ട് അഡ്ജസ്റ്റ്മെൻറ്റിൽ ബാഡറ്റ് കാണിക്കുക, എന്നിട്ട് ബാഡറ്റിൻ്റെ പ്രൊവിഷൻ ഫോർ ബാഡറ്റ് ന്യൂ പ്രൊവിഷൻ ഫോർ ബാഡറ്റ് ആഡ് ചെയ്യുക, ഓൾഡ് പ്രൊവിഷൻ ഫോർ ബാഡറ്റ് മൈനസ് ചെയ്യുക, അങ്ങനെ പ്രോഫിറ്റ് കാണിക്കുക. ബാലൻസ് ഷീറ്റിൽ ഡെപ്റ്റേഴ്സ് നിന്ന് അഡ്ജസ്റ്റ്മെൻറ്റിലെ ബാഡറ്റും ന്യൂ പ്രൊവിഷൻ ഫോർ ബാഡറ്റും മാത്രം മൈനസ് ചെയ്യാം. ദെൻ പ്രൊവിഷൻ ഫോർ ഡിസ്കൗണ്ട് ഓൺ ഡെപ്റ്റേഴ്സ്. You have to first enter portion for discount on debtors on the debit side of profit and loss account. Then you have to deduct portion for discount debtors from the debtor item in your balance sheet. Then the 10th adjustment is portion for discount on creditors. First of all, you have to show portion for discount on creditors as a credit item in your profit and loss account. Then the another adjustment is you have to deduct portion for discount on creditors from the creditors in your balance sheet. Then interest on capital. First, you have to enter interest on capital as a debit item in your profit and loss account. Then you have to add interest on capital with the capital element in your balance sheet. Then interest on drawings. First of all, you have to show interest on drawing as a credit item in the profit and loss account. Then you have to deduct interest on drawings from the capital aspect of balance sheet. Then deferred revenue expenditure. First of all, you have to show a fixed percentage of deferred revenue expenditure in profit and loss account. Then you have to show the balance amount of deferred revenue expenditure as an asset item in your balance sheet. Then a commission on profit, loss of goods by fire or accident. Commission profit, what is the adjustment of commission profit? First of all, you have to show commission profit as an expenditure item in profit and loss account. Then you have to show commission on profit as a liability item in balance sheet. Loss of goods by fire or accident. ഏറ്റവും ആദ്യം ചെയ്യേണ്ടത് ട്രേഡ് അക്കൗണ്ട് ക്രെഡിറ്റ് സൈഡിൽ മൊത്തം ലോസ് കാണിക്കുക. എന്നിട്ട് പ്രോഫിറ്റ് ആൻഡ് ലോസ് അക്കൗണ്ട് ഡെബിറ്റ് സൈഡിൽ ഇൻഷുറൻസ് കമ്പനി തരാത്ത എമൗണ്ട്. ഫോർ എക്സാമ്പിൾ 50,000 രൂപയുടെ ലോസ് വന്നു, ഇൻഷുറൻസ് കമ്പനി 40,000 തരാൻ സമ്മതിച്ചു, 10,000 തന്നിട്ടില്ല, ആ 10,000 ലോസായിട്ട് പ്രോഫിറ്റ് ആൻഡ് ലോസ് ഡെബിറ്റ് സൈഡിൽ എഴുതുക. ബാക്കി ഇൻഷുറൻസ് കമ്പനി തരാൻ സമ്മതിച്ചു 40,000 ബാലൻസ് ഷീറ്റിൽ അസറ്റ് ആയിട്ട് എഴുതുക. ദെൻ ഗുഡ്സ് ഓൺ സെയിൽ ഓൺ അപ്രൂവൽ ബേസിസ്. If approval is not obtained before the due date, adjustments may be made in account. Sales account debtor to debtors account and stock account debtor to trade account is the adjustment entry regarding goods on sale on approval basis. Then you have to deduct that amount from sales and debtors, and you have to add that amount with the closing stock on the credit trade account, and you have to add that amount with the closing stock and show as a asset item, current asset item in the balance sheet. Then reserve fund, goods distributed as, for example, hidden adjustments, drawing in goods, others are the other adjustments which are to be adjusted in the financial statements. So you have to learn all those adjustments with utmost care and prepare the financial statement utmost as far as correct and possible. Then we have to look at the previous question paper of net examination. There is a question which is a question of June 2012 net examination. The question is, what is the correct sequence of the following action required for the preparation of financial statements? The answers are: first, trading account; second, making adjusting entries; third, balance sheet; fourth, profit and loss account. Select the correct answer from the given below. The correct answer is the option C is the correct answer. Then there is another question. Which of the following account statement shows the financial position of the business? First one is profit and loss account, second one is balance sheet, third one is fund flow statement, last is cash book. The correct answer is balance sheet. So you have to learn the financial statements with adjustments, so care and utmost confidence. Then we have to look another module in the next class. Okay.